I know a lot of information circulates on the internet about the income piece where people say, oh, you got to be in your job for 2 years, or you have to have the same employer for 2 years. No, you guys, you can have a period where you're on a sabbatical. You can have had time off where you had a baby. You can even have had a layoff. The guideline is misinterpreted by a lot of people. You guys know I'm a mortgage lender, so I'm just going to cut right to the chase. We need 3 things. So the first thing we need is income. If you are a salary or an hourly coworker, a W-2 coworker, we're just going to need 2 years of W-2s, 30 days of pay stubs. That's it. If you are a self-employed person, by all means, check out my video where I break it down to the T on how you can qualify for a home loan. Next thing we need is credit. We go up to an 850 and we go down to a 580. Now, keep in mind that every mortgage lender is different. Every lender has their own set of requirements. In addition to the credit score requirements, there is a DTI requirement where you may want to check out this video where I talk in great detail about how to calculate your DTI. But the takeaway is when we look at your credit, we will take into account your student loans, your credit card debt, your auto loans, any mortgages that you have in your name. And we will combine all that against your income, and then that will tell us a yay or nay for your approval. The last thing we need is cash. We need cash to cover your closing costs as well as your down payment. Now, closing costs vary based on the home itself. To be conservative, I always say closing costs range from 3 to 5% of your purchase price. The majority of your closing costs are third-party charges that we do not control, such as transfer taxes, property taxes, homeowners insurance, title. And then we have your down payment, which will range from 0% all the way up to 25%. That will vary based on, are you living in a home? Is this an investment home? Are you a veteran? Are you doing FHA? Are you doing a 3% down payment conventional loan, etc., etc.? And if the 3% down payment conventional loan interests you, by all means, check out this video where I go into great detail about it. And that's it. Cash, credit, income. Those are the 3 things you need to buy your new home. And listen to me, if you are missing one of the items, or if you are unsure about one of the items that I mentioned just now, please reach out to me so we can create a plan and discuss it together. Because what I see is, especially with all the information circulating on the internet, and I'm a millennial myself, I adore that you guys educate yourselves, but sometimes what you may think we care about, we don't care about. What you may think is going to disqualify you from a loan, we are not going to disqualify you from a loan. For example, what I stated earlier about a lot of times people will think that because they switch jobs that they cannot get a home loan. You guys, that is incorrect. Or one of my veteran clients that I just started working with didn't think they could get a second VA loan without the PCS orders. You guys, I know I'm getting very specific, but I have to give these examples on, it's not, some of these textbook things that you see on the internet are just that. They're just textbook things, or they're not interpreted correctly. So listen, I hope this video was helpful for you guys. Please share it with a friend, and I will just be back with another video next week.